Hey, welcome back. It's Jason Walter here, and here's your latest housing market update. In today's video, I'm going to share a new article from Black Knight. So Black Knight is a data analytics firm that basically supports the real estate and mortgage industries. And in this report here, they said that in May, we saw the largest monthly slowdown in home price growth since 2006. Also, within this report here, they shared the cities that are slowing down the most across the United States, and I'm going to take a deep dive into these cities here. So with that said, let's go ahead and dive right into the video. And of course, if you guys get any value out of today's video whatsoever, then please hit the like button and greatly appreciate that. So with that said, let's go ahead and dive right in. This was actually published on July 6th, which was today at the time of this video. It says home price growth slowed in 97 of the 100 largest U.S. housing markets in May. So in other words, 97% of the largest U.S. housing markets actually slowed down in May. And the national annual appreciation rate in home price growth actually pulled back by more than a full percentage point from the prior month. So home prices actually increased by 19.3% in May of this year compared to May of last year. But this is actually down from the 20.4% increase that we saw last month in April. And this is actually the largest single month deceleration since 2006, again going from 20.4% down to 19.3%. However, though, prices were still up 1.5% month over month. In other words, home prices increased on average from April to May by 1.5%, and this is nearly twice the historical average for May. So this is actually pretty nuts because the current rate at 19.3% is obviously much higher than historical levels. So historically speaking, home prices tend to increase in the range of 3 to 5%, and of course not 19%. And because of spiking home prices and of course spiking mortgage rates, housing is now the least affordable it has been since the mid-1980s. On a national level, in May, we also saw a huge increase in housing inventory across the United States. Of course, every housing market's different, right? But on average, May, we saw a big increase of housing inventory. It says, though, even though May saw the largest jump in housing inventory in the past 5 years, as pending listings began to normalize, in other words, we're seeing a pullback in contracts signed, that's a pending home sale, and existing listings sit longer on the market. In other words, houses that are listed for sale are not selling as quickly as they once did 1 year ago. But even with this jump of housing supply, inventory still is at a 60% deficit. What I believe they mean by this is that the number of houses for sale right now is basically at a 60% deficit compared to pre-COVID levels. Because have a look at this. This is on Redfin's Housing Market Data's website. And here's 2022 right here, and the blue line right here is 2019. So the most recent stats we have right now, this is for the 4 weeks ending June 26. We have approximately 675,000 houses for sale. Compare that to 2019 at this time, we had approximately 1.2 million houses for sale. In other words, according to Redfin's data, we have approximately a 50% deficit compared to this time in 2019. According to Black Knight's president, he had this to say: the annual home price growth rate fell by more than a full percentage point in May, the largest monthly decline at a national level since 2006. However, even with growth slowing in 97 of the top 100 U.S. markets, overall home prices still rose 1.5% from April. That's on a month-over-month basis. And this is nearly twice the historical average for the month of May. And he basically says here, any mention of 2006 could set off some alarm bells though. But he says here, the truth is, we would need to see deceleration at this rate for more than 12 months just to get back to a more normal 3 to 5% annual growth rate. That said though, the pace of deceleration could very well increase in the coming months. So in other words, we could see a deceleration. Again, this is the most recent stats going from 20.4% now down to 19.3%. So we could see this number slow down further in the next coming months, according to Black Knight here. But they said we've already seen this in some markets such as Austin, Texas, Boise, Idaho, and Phoenix, Arizona. So have a look at this. Here is the latest trends we have for Austin, Texas. So Austin, Texas right now, again, this is on Redfin's website. And this is for the 4 weeks ending June 26 again. So here's the number of new listings in Austin, Texas, increasing by 10.7% from 1 year ago. So right now, the number of new listings hitting the market in Austin, Texas is well above 2021 and also in 2019 as well. What they're also seeing in Austin, Texas is a huge increase of active listings. Active listings is housing supply, the total number of houses available for sale. So right now, new listings again up 10%, but look at this. Active listings are up 37% compared to this time in 2021, and they're approaching levels we saw back in 2019. So new listings are up, but active listings are up 37% in Austin, Texas, which is pretty remarkable. But have a look at this, because they're seeing a huge increase of new listings, but even a bigger increase of housing supply. So if they still had a very strong home buying demand in Austin, Texas, with this giant increase of housing supply, one would assume that more and more contracts would be signed. In other words, pending home sales should increase given the fact there's more options for home buyers. However, though, they're seeing just the opposite though. So even though they're seeing a giant increase of housing supply, pending home sales are down 24% from 1 year ago. And because of this pullback in home buying demand, look at this, price drops. Price drops are basically through the roof, far higher than 2019's level, and also back in 2021 as well. So right now in Austin, the share of price drops right now is 10.3%, but this is by week. So multiply that by 4. The share of price reductions right now for active listings is 40%. So out of all the houses for sale in Austin, Texas right now, approximately 40% have already reduced their asking prices. What's pretty remarkable regarding this is that look at this trajectory. Ever since basically April this year, the share of price drops has been skyrocketing. Again, 10.3% by week in Austin, Texas. But compare that to 1 year ago at this time, it was only 2.7%. So they basically have 3 times more price drops right now compared to 1 year ago in Austin. Also, it appears that for the year at least, in Austin, Texas, prices basically hit peak levels in May. So at that time, which is the 4 weeks ending May 22nd, home prices were up 24% compared to the same time period 1 year ago. But right now, the most recent stats we have, we're only up 12%. So right now, the median sold price in Austin is $546,000, but back in May, it was $574,000. Let's talk very briefly about Boise, Idaho. I actually talked about Boise in a separate video, but have a look at this because it's worth mentioning again because Black Knight is stating that these are the markets where they're seeing a deceleration in home price growth. So new listings in Boise, Idaho is actually up 67% compared to 1 year ago, which is absolutely insane, far higher than levels in 2019 and 2021 as well. What they're also seeing is that this giant increase of new listings, but an increase of active listings as well. So active listings are still down 22% compared to 1 year ago and far lower than 2019's levels. But look at price drops. Price reductions is pretty remarkable. Price reductions has basically been going through the roof. Right now, 15.9% by week have price drops in Boise, Idaho. So in other words, approximately 64% of active listings have had price reductions, which is kind of mind-blowing, especially when you look at the past couple of years. I mean, right now, by week, it's 15.9%. Multiply that by 4. That gets you the, 63.6% share of price reductions by a month. So look at right now, by week, 15.9%, but 1 year ago, and back in 2019 as well, it was only 5.6%. All right, so that was Austin, Texas, and Boise, Idaho. But let's have a look at Phoenix, Arizona, which I actually haven't shared this on the channel yet, but I thought it'd be fun to kind of take a look at their market here. So right now, the number of new listings in Phoenix, Arizona is basically up 9.5% from 1 year ago, and also far higher than 2019's levels as well. And take a look at this. Active listings in Phoenix actually has surpassed 2021's levels. So right now we're up 24.31% from the same time period 1 year ago, but we're still far lower compared to 2019. So right now we have approximately, I say we, in Phoenix, Arizona, they have 15,509 active listings in Phoenix. Compare that to the same time period in 2019, they had approximately 22,000 houses for sale. So they still have a long ways to go before they're seeing pre-COVID levels. So it's interesting to see that active listings are still down compared to 2019, but far higher compared to 2021, up 24%. And because of this, take a look at this, or not because of this, take a look at this, because obviously if they had a lot of home buying demand in this area or in this city here, one would assume if the number of active listings has basically been increasing greatly compared to 1 year ago, we should see a lot more contracts signed. In other words, a lot more pending home sales. But in stark contrast, take a look at this. Pending home sales are actually down 18.82%. So even though they're seeing a big increase of housing supply compared to 1 year ago, they're seeing a decrease in pending home sales, which implies they're seeing a pullback in home buying demand in Phoenix, Arizona here. And because of this pullback in home buying demand, take a look at price drops. So price drops in Phoenix, Arizona, take a look at that. 11.3% is the share of active listings with price reductions. Again, multiply that by 4. Approximately 45% of active listings have had price reductions in the last month. Compare this to prior years, or 2019 and 2021. Again, by week, we're at 11.3%. But back in 2019, it was only approximately 5%. So basically the share of price reductions in Phoenix, Arizona, now compared to 2019 has basically doubled. But it's actually worse now compared to 2021. Right now, 11.3%, but this time last year, there was approximately 3% of active listings with price reductions. Now it's 11%. So in other words, approximately 4 times more price reductions now compared to 1 year ago. I'm obviously a real estate agent. I'm based in Sacramento, California. I'm also not based in Austin, Texas, Boise, or Phoenix, Arizona. But if you guys live there and have any insight regarding the markets there, then please leave us a comment below. But this is just my insights or my analysis of their housing markets based on Redfin's data that we have. All right, so going back to this report from Black Knight, they went on to say the following. The record low housing inventory that had been driving these price gains nationwide has also begun to improve, albeit slightly. In other words, we're seeing an increase of housing supply, which is obviously a step in the right direction. It says here, though, that all major markets, in other words, those 100 markets we're talking about, are still facing inventory deficits. Among these are some of the hottest housing markets in recent years, and those would include San Francisco, San Jose, California, and Seattle, Washington. And unsurprisingly, these are also among the markets seeing the strongest levels of cooling off so far this year, with annual home price growth rates down more than 3 percentage points in recent months. So let's actually talk a little bit more about San Jose and also San Francisco. According to the latest trends from Redfin again. You would think this is a sponsored video from Redfin, but it's not a sponsored video. I actually really like their housing markets trends on their websites. And it's also very easy for me to share the data with you guys. I also really like how they compare 2019's levels as well. I actually emailed them to actually request to include 2018's levels or 2018's housing market trends. But they said that's going to be in the future potentially because it's going to be too much data for their servers to include in their trends here. But I digress. So let's have a look at San Francisco. So San Francisco home prices basically peaked this year, basically in May. When home prices were at $1.663 million. So basically just under $1.7 million for the median sold price home in San Francisco, which of course is absolutely insane, given the fact that's basically 4 times the national levels. So right now the national median sold price is approximately $400,000, obviously far less than $1.7 million. So at this time, home prices were up 9% from the same time period 1 year ago. So ever since then, home prices have more or less been on a declining trend. And by the way, these are median sold prices, a lagging indicator of when the home seller accepted an offer from a home buyer approximately 1 to 2 months ago. Again, a lagging indicator, home sold prices. But take a look at this though, because we were up 9% year over year, but now they're only up 1% year over year. So home prices right now, or at least the median sold price, is basically on par with 2021's levels at the same week 1 year ago. We're seeing a similar trend in San Jose, California, for example. So in San Jose, it's approximately 45 minutes, about an hour south of San Francisco. So in the middle of May, home prices basically peaked at $1.6 million. And at that time, home prices were up 19% from the same time period 1 year ago. But as you can see here, ever since then, home prices have been declining. At least the median sold price has been declining. So now on a year-over-year basis, they're only up 5%, whereas basically 1 month ago or 2 months ago, we were up 19%. And going back to San Francisco, active listings is basically on par with 2021's levels. So basically flat compared to 2021, but well above 2019's levels. But take a look at price reductions in San Francisco. So price drops basically going through the roof. I mean, not as high as a percentage compared to Austin, Texas and Boise, Idaho, but take a look at that. 5% of active listings right now have price drops by week. So approximately 20% by month, far higher than the past couple of years. And in San Jose, California, active listings is basically on par with 2021's levels, only up 5.58%, still far below 2019's levels though. But look at price reductions as well. So price drops in San Jose basically have been going straight up as well, far higher than the past couple of years, or in 2019 and 2021. So right now, the levels right now is 8% by week. Multiply that by 4, that gives you 32% of active listings with price reductions by month in San Jose, California. Hope you guys enjoyed that analysis regarding these different cities here across the United States. I found it very interesting how every housing market's different, every city's different, and there's some big changes, especially regarding price reductions and of course, housing supply. Some big changes due to this, housing affordability, right? So it says here in Black Knight's report here, with 30-year rates of mortgage rates hovering close to 6% and home prices up nearly 11% since the start of this year, housing affordability is at its worst point since the mid-1980s. So the average home price is more than 6 times the median household income, the largest multiple on record since the early 1970s. Can you say not sustainable? Also, as of mid-June of this year, it takes 36.2% of the median household income to make the mortgage payment on the average price home, and that's well above the 34.1% post-1980s peak of July 2006. And by the way, when they're talking about an average mortgage payment, they're only talking about principal and interest only. This actually excludes insurance and also taxes. So please leave me a comment below what you're seeing in your neck of the woods. Also, if you guys got any value out of today's video whatsoever, then please hit the like button. I greatly appreciate that. Hope you guys have an awesome day. Look forward to seeing you on the next video.